It was a terrible day for Indian stock market today as rumors and clarifications flew thick and fast while the global backdrop also continued to be weak. Denial of bail to DMK MP Kanimozhi and the removal of Arcom and Reliance Infra from the Sensex also added to the sentiments. FI outflows in the recent day and a weaker rupee added fuel to the fire. The Indian indices did, however, stage a smart recovery in the late morning trades after the government said that no meeting has been scheduled with Mauritius on the renegotiation of DTAA. Reports also quoted a source in the Mauritius government as saying that the DTAA with India was not being renegotiated. But the various clarifications from the central government side had very little impact on the market sentiment. Finally, the BSE Sensex lost 364 points to close at 17,501 and the NSE Nifty lost 108 points to close at 5,257. The slide was led by Arcom and Reliance Infra, which slipped 8% and 6% respectively after the BSE said it will exclude these two stocks from the Sensex from August 8th. On the other hand, shares of Sun Pharma ended flat while Coal India rose by 0.3%. Both these stocks will replace Arcom and Reliance Infra in the Sensex. The index heavyweights like Reliance Industries hit 2009 year lows. The stock dropped 4% to end at 833 rupees. Shares of TCS are down due to reports that the Income Tax Department has asked India's largest software service exporter to pay 6.56 billion rupees. The newspaper says that the IT department has disallowed the company's claim on multiple items including state taxes paid overseas, software expenses claimed as revenue expenditure, deduction claimed under Section 10A and transfer pricing issues. Shares of GTL Limited and GTL Infrastructure Limited plunged in early hours of trade today due to massive spurt in traded volumes on media speculation that promoters have sold shares in the open market. However, the company's chairman and MD denied any problem with the two companies' business. There was sheer panic in the Indian market today thanks to the various media reports pertaining to a possible review of double taxation avoidance agreement with Mauritius. Since a big chunk of India's FDI and FII comes from Mauritius, the news obviously rattled the investors. Also adding to the negativism is the lack of progress made by the Greece in securing fresh bailout from the EU and the IMF. The fact that the crash came on large volumes is a cause for concern. Hopefully, there will be more clarity on the Mauritius DTAA soon. For now, one has to be cautious. Thank you. Wish you have a great evening ahead.